Okay, folks, welcome to another Thursday night Stock Charts Live. Welcome. Happy day two of, is it day two? Yeah, full day two of the, we don't know who our president's going to be, nightmare. So, I was going to talk about correlations between the stock market now versus back in 2000. I was trading back then. Then I took a look at the charts that I pulled up, correlations between now and then, because I remember we didn't go straight up. We went straight down. But when I was taking a look at the charts in preparation for tonight's show, I remembered that, you know what, that was right around the dot-com blow-off. So it didn't make any sense to go over that chart because all it was a continuation breakdown. The election just acted as a catalyst. We dropped down 20%. And I think that we are on very, very thin ice in this market. I do carry a short position. We did not go adding more to it today. We'll talk about the weekly charts and how we appear poised to close out the week. But remember, we're going to go over the weekly charts, but there's one trading day left to go, and it can make a big difference. And on Saturday, with members, we'll go over the closing price action on the week, and we'll develop a strategy as we move into the new trading week. Do we want to unload longs? Do we want to add to longs? Do we want to take hedges off? Do we want to add to hedges, etc.? So expect that, members, as usual. What else do we have? I want to take a look at the PE historical chart for the S&P 500 just to illustrate where we're at relative to 2000. This time, 2000. Eric, hello. Neil, we'll take a look at it. Baba Pops. Good evening and good night from Germany. What part of Germany? WG Shocker, Cat. Good evening to you. Yeah, I know it's rough, Cat. We'll get through it. I have a theory about how this is all going to end. Earnings sucked in 2000. Yep, and not much different right now, right? Breeders' Cup weekend at. Oh, hey, Larry, how you doing, brother? You got it. All right, let's go to the historical chart, S&P 500. I think what President Trump is doing at current is a game of four-dimensional chess. What he's going to do is he's going to unload a world of hurt on Biden and the cronies across the fruited plains. Not only is he going to look for a recount, he's going to point out the fraud in these states, and ultimately where I believe that this election is going to be settled, is not with the Electoral College. Everybody keeps looking at the Electoral College. But in the Constitution, and I don't know this verbatim, do your own research. I had a YouTube video forwarded to me from a good buddy last night. And if you go on to, let's see if I could bring this up. Fox Business. If you go take a look at this interview that Maria Bartiromo did with Steve Bannon of Breitbart News this morning, he reiterated what I watched last night on how this is going to play out. Here we go. I'm going to share this link with you. This is 4D stuff. Kat, I just posted it in the chat box. You're good to go. It's very interesting. And I think that what they're going to do is they are going to spin these local and absolutely corrupt local politicians into a frenzy, showing that they're incompetent. And it's not even going to come down to a recount. It's going to come down to the Supreme Court saying, listen, we're not deciding this. You guys didn't meet your obligations under your own legislation, your own state laws. Therefore, we're kicking it over to the House of Representatives to make the decision. Now, why is this good for the president, you might be asking, when you have Nancy Pelosi and the Democrats that are in charge of the House of Representatives? I will answer that. The reason why is that it breaks down by state delegation. So the states vote, not the individual Congress person. So it's not as if they have a majority of Congress people that are Democrats versus Republicans. No, no, no. What it comes down to are the number of states that took, or that Trump took. So you have more red states than blue states. And if it goes to the House of Representatives, then in all probability, you never know with the Republicans, but in all probability, they will vote to have President Trump as president. That is probably going to be the ultimate outcome because it makes sense. So I think it all hinges on the Supreme Court, and therein lies the resolution. Now, I find it amazing that all you see are videos, literal videos. You could take a look at O'Keefe from Project Veritas. He's put out 2 videos in the past 24 hours. And nobody cares. Our old friends over at Fox News, all the videos that are coming out, nothing. Only bad news against the administration. I'm not even going to go to the New York Times. So this is where we're at. I think that's where we're going to go. And it's probably going to be the House of Representatives. Let's get to the weekly charts. Big Bear. Hi, Bob. I scalped a quick trade on Rocket the last 2 days. Do you think that there is chance next week with earnings to grab another one? Yes, I do. I think that Rocket is on the mend, and assuming that yields continue lower, and that should bode well for Rocket Mortgage. What earnings are going to bring with it, I don't know. I wouldn't be a holder of a large position not being hedged into earnings, but I think that the chart, absent earnings, looks good for a continuation move up higher. Watch yields, though. What I do is I watch the TLT relative to Rocket. If TLT is going up, Rocket usually goes up as well. I'm long of Rocket Mortgage, and a fairly big position too. Nadia, hello, how are you? Good to see you. Okay, let's go to, I had to close out all my windows because I had to reboot as usual. Right before I go live, my computer freezes up. All right. Sorry, folks. Okay. What we do here, for those that are new, what we do on Thursdays is we go over the weekly charts. How are we looking? How are we shaping up as we proceed into the close of the week? And what we like to do is always take a look at the bond market first. The bond market is the tail that wags the stock market dog. And The 20-year bond is looking pretty awesome. Now, we were trading above resistance today, but we gave up those gains. We closed, let's call it at, I'm getting an error message from YouTube. Give me a break, YouTube. So we're at resistance, very close to a breakout. I'm loving the W formation forming here. Volume, very good. So who was it? Big Bear that said you like Rocket Mortgage? Watch the TLT. The closer that you see TLT close to the highs of the week, the higher the probability of Rocket Mortgage moving up higher next week. The 10-year yield. Bearish reversal bar on the week. My phone's going nuts. So we took out the lows of last week. Very bearish price action on yields. That bodes well. So what am I thinking when I look at these two charts? It's a healthy week so far on the bond price. We're off the highs of the week, which gives me a little bit of concern. We have 1 day left to go. A lot can happen. If we fade from where we closed today, I would have my antenna up about a concern about a rollover next week. Right now, not so much so. Am I concerned? So assuming that we close up strong this week, what do you want to be looking at? Technology. Technology, and commodities. So why? Why is that important? Because what you're seeing happen right now is something that we have been waiting for. We've been in this deflationary brief period of time these past several weeks. Now, concerns about the economy. The election, by and large, is behind us, despite all the madness that's out there. How is it possibly behind us, Bob? You might be asking. Simple. Think about the rhetoric that was coming out and bought hook, line, and sinker by the media, whether they believed it or not, whether they just wanted to push the narrative, who knows? But the market certainly bought the narrative that we were going to go full crazy with adding 2 states. What would that do? That means you have a Democratic lock on, you have a one-party system. Republicans are dead. They're gone. It'll be over for generations. You would have had the TPP, Trans-Pacific Partnership. They'll try to reintroduce it. It's for the Senate to advise and consent. It's a Republican Senate. Therefore, they may or may not. Republicans are weak, spineless jellyfish. Yes, I know. I get it. But as it stands right now in the eyes of the market, the Senate being in Republican hands is good enough. They'll worry about the details later on. What else don't we have to worry about? Socialized healthcare. What's been rallying? Biotechs, healthcare stocks. So a lot of the crazy that the market was pricing in is now out. That's why you're seeing the market rally right now. Add to that if it's a Biden presidency, that if you thought you were going to see spending before with a Trump presidency, which you would have, you ain't seen nothing yet, because he's going to blow a hole in the deficit like you've never seen before. So that's why you're seeing money rotate into stocks so heavily, because they're expecting the next big heroin injection, and it's going to be big. It has to be big. No matter who's president, it has to be big. It's the law of diminishing returns. The more you blow up this bubble, the next round of heroin, it needs to be a larger and larger dosage to get the same high, to keep the bubble going, or else it goes poof. Hey, Rick Rufy. Yeah, you're the second one asking about NEO. Did they report after hours or something? Who else is? Eric asked about that. We'll take a look at it. Did they report after hours? US dollar. Now, here's where the rubber meets the road. What we're seeing here on the US dollar is the end game. And it doesn't matter who's president. It just doesn't matter. When President Trump was elected, I was saying buy gold. Before he was elected, after he was elected in 2016, I was saying buy gold. It didn't matter because the budget deficits were so huge that inflation was going to be on its way. And we've seen inflation. And you may be saying, no, we don't, Bob. The government says there's no inflation. Oh, yeah? Why are the tips just off of all-time highs? Mom and pop do not buy tips. Institutions buy tips. What do they know? If you take a look at commodities this week, they are ripping through the ceiling. Bitcoin, ripping through the ceiling. If you do a overlay of, I know I have this chart, of the consumer price index. God, I must sound nerdy. Here we go. The consumer price index and Bitcoin. I went over this a while ago. And in candlestick is the CPI, Consumer Price Index, the measure of inflation at the consumer level. And you can see that it is ripping. What trades in tandem with? Oh, excuse me, I'm sorry. Bitcoin is in candlestick. It's been a while since I looked at this. Bear with me. Bitcoin, yes. Bitcoin is in candlestick. CPI overlaid in dotted gray line. Yes, sorry. Had a brain boop there. So Bitcoin ripping through the ceiling along with what? CPI ripping through the ceiling. They trade in tandem. The higher CPI goes, the higher goes Bitcoin. Overlay gold. Gold. Same deal. Right? Same deal. CPI ripping up higher. Gold off the highs, but it's going to be ripping up higher very, very soon. So commodities are telling you, they're sending you a signal. Back to the US dollar. This dollar's strength is unsustainable. This bubble is bursting. We had a brief rally. Expect a continuation breakdown on the US dollar. On the week alone, we're down 0.67% on a currency. That's a huge move. So the dollar in a breakdown. You know what? This is not I think it's down more. This is a monthly chart. I think it's down more on the week. Sorry. On the week, we're down 0.67%. Okay, same deal as the monthly. So we've given up all our gains. So what else do we have? VIX, crushed. You have a lot of enthusiasm out there, folks. A lot of enthusiasm. Cheap money going to be sloshing into the market. People are front running the new round of QE. And they said that Jay Powell, I didn't look at his notes today about their policy, but there was a bunch of headlines that he was hawkish. Listen, when the Fed speaks, I don't look at the headlines. I'll let the algos look at the headlines. What I like to do is I like to look at the charts. What is the stock market doing? If the stock market is rallying, they're happy with the number. If bonds are pulling back off the highs, that's a concern. Am I still live here? Yeah. Can you still hear me? I just had a blurb from YouTube. Streaming error. So net, let's take a daily look at the transports. Not a bad close. How was our volume today? Very light. But on the week, the transports are looking rock solid. The markets were satisfied enough with the Fed's comments to keep the party going. The Dow Jones weekly chart. I'll tell you, a very bullish week. Up over 7% so far in the week. Last week, an utter catastrophe. This week, we gapped up higher, new weekly high. This rarely happens, this type of price action. Let's go to a daily chart really quick. Here's what I'm concerned about. Let's bring up a fresh chart of the Dow. Okay. So let's take our crayon out. Because keep in mind, the Dow Jones undercut the lows of September on this pullback. We had a lower high in October versus September. So we have a lot of resistance up here on the Dow. Volume today was slightly below average. I'm not going to be confident that we have a Dow that's going to proceed up to new higher highs until, of course, we break out and close above. Let's call it 28,750 on the Dow Jones. Now, what we do have is a breakout. I know it's hard to see here, but ever so slightly, we have broken out on RSI daily time frame. Stokes are looking good. I don't like the gaps up. Normally, what I like to see in a healthy market is you have a strong up day, next day morning pullback, you rally back, you close at the highs of the day. What they're doing right now is they're squeezing shorts. Each morning you're waking up, we're up 1.5%, 2%. You know, I get suspect of that. So I worry that we're seeing a little bit of shenanigans going on in the market. That's why I'm going to keep my hedge on for now until we see a confirmed breakout or we pull back, put in a higher low, down volume drops off on that pullback, and then we make a new higher high. Once we start seeing positive price action, I'll be more comfortable with this rally right now, given the fact that earnings are not good. We're very, very expensive. I mean, I brought this up earlier. I even teased it. You take a look at, I got to go over here. You take a look at the S&P 500. If you want to talk correlations between now and 2000, the last time we had an election like this, take a look at the valuation. I'm just going to focus on S&P 500 in red. This red line is overvalued. S&P 500 PE greater than 20 or 20 or greater. Here's the S&P 500 in black. Here's where we're at. We are so overbought. So overvalued, not overbought. Even greater, I would argue. Even greater than back in 2000. And we don't know who our president's going to be. For all intents and purposes, we have a coup d'etat going on. We've had one for the past 4 years. And nobody cares. The stock market doesn't care. It's absolutely incredible. So what happens when people do care? I don't want to see that picture, man. It's going to be one ugly market. So back to the weekly charts. I want to take some requests. Small caps looking very, very good. We are at the highs of the year on the small caps this week. So that's very, very bullish. I was long as small caps. I booked profits on that. The banks, I'm rather surprised about the banks because we have yields dropping like a rock and the banks are up. So the banks are performing well, despite the fact that yields are dropping. Usually they do well in a rising interest rate environment. So the bank's doing well. They're getting ready to break out. The Qs, they did break out today. And they broke out on the week. The question is, do we hold this breakout point? That's the question. Tomorrow's a key day. Very, very important. And I'll tell you, if we do fail here, you're going to see one hell of a sell-off in this market. Volume is good on the week. Ultimate oscillator not looking bad. Close to a breakout, no cigar. Daily time frame. Closed right above a support level. Now, the last thing that longs want to see is a failure to hold this support level. If we fail to hold, this is the reason why I didn't go add into a short position today on this breakout. If they fail to hold the support level and we drop back down into this trading range, I'll be leaning into the short side on this market. Volume's good. Technology, weekly time frame, good week. Volume's going to roll in about average. Daily chart. We recaptured 120 support. Look for a breakout above 122.75. Volume good. Not bad charts, I have to say it. Semis broke out on the week. Clean breakout. New all-time highs this week. Very, very, very extended on MACD. Biotechs. This is a leveraged ETF. This is what I was talking about earlier about the fact that the Republicans held the Senate and they gained ground in the House of Representatives. That's why you're seeing the biotechs, healthcare move up higher. Take a look at Cure. This is the leveraged ETF putting you long of healthcare. Very close to a breakout here. So those stocks are looking very good. Energy broke out. Actually, I shouldn't say that. It broke down last week. This week it recaptured support. I like the chart. We're backing and filling here. We're long of ExxonMobil. I have a lot of ExxonMobil. We sold covered calls. The 35.50 strike price expiring tomorrow. So those should expire worthless. Energy can't get a lift at current. What's First Solar doing? Up nearly 9% on the day. Okay. I would like to get a piece of First Solar. Uh, Oil, good week, reversal, good for energy. Excuse me. Not gas had a rough day today. Gold. Oh, this is the GDXJ. I already went over gold, really. You know, let's take a look at gold. Big breakout. Stokes is still very, very weak. Daily chart. We closed right off the highs of the day. I mean, if Jay Powell were as hawkish as the headlines say, gold would have sold off and sold off hard. You would have seen the dollar rally back. They didn't. So don't go listening to the headlines. Listen to the markets. Watch the charts. Chart looks good here. We're going to be a little bit extended tomorrow if we gap up higher relative to the third standard deviation Bollinger Band. I still like gold. I think it's going up a lot higher. The GDXJ, we bought a bunch back last week. We took the leap of faith. It's paying off this week. So congrats to those who joined in on that trade. And I want to buy more. Ideally, though, we get a 60 handle on a closing basis on the GDXJ. Daily chart very close to a breakout here. Very, very close. We close with a 60 handle. We'll probably, not definitely, but probably look to add more. We'll send out an alert to members. A couple of favorites or gold money. This is my little gold stock, but not a miner. It's not a miner. It's a basically they have a credit card. You deposit funds and it's held in gold, and you can use not a credit card. It's a debit card, and you use rather than holding your money in U.S. dollars in their account, you hold it in gold. So if the dollar's dropping, your assets are held in gold, so the value of your money market is going up higher. It's protected. So I like this company. Peter Schiff is a part owner of this company. Good week so far. I'll be looking to add more. Cal-Maine Foods is our little egg company. Another commodity play, folks. Doing very, very well. Good week. Good reversal week. Silver. We're up nearly 15% on this trade this week. Where is uranium? Bullish reversal bar. We retested support. It's holding. Love uranium. Daily chart. We're already long of it. Looking to buy more. All these commodities, they're coming back. So if you ask me, what do I want to own? Commodities or Microsoft? Commodities. U.S. steel, flat rolled steel prices through the roof. They're going up higher. U.S. steel up on the week. They had a rough day yesterday. They bounced back today, up on the week again. Boeing, weekly chart, everybody's favorite. Boeing. We're going to get higher lows on Stokes. I think we're breaking out very, very soon on Boeing. Daily time frame. A close above 160 would have me buying more. I would hold off until that level. We did steal. Where's my ExxonMobil? ExxonMobil. Struggling here. Struggling to recapture $34 per share. Let's take some chart requests. Woo! There's a lot of charts. Got to take a breath. Let's go to the comments. Falcon, please explain to me why the major earnings reports like Qualcomm, Pins, etc. post after hours. What is the purpose and or benefit? Did extremely well with QCOM just started trading profits on the highs. It shouldn't really matter when the company reports earnings. If you're speculating on earnings, it's a very dangerous game because you need to be in the know, right? What the whisper is on the street. Are good earnings priced in? Earnings can come out as expected, even slightly beat, but they could still disappoint the street. So that's a game that I do not play at all. I'm not in the know. I'm not part of that crew. I'm not part of that clique. So I know what. There's a book written by Harvey Mackey, Swimming with the Sharks, something to that effect. I don't like to swim with the sharks. So I avoid that type of game. I think it's a good play for options. I like that type of trade. If you can get cheap options, a spread, you can benefit from a big move higher, big move lower, just out of the money or out of the money, call or put options in a high beta name, expiring soon, little risk, lots of reward. That I like. But if you're buying the common and holding that, especially with a Pins, I mean, that's a very volatile stock. Qualcomm, not so much. It's a quality name. Not that Pins isn't, but it's not as volatile. So I would just be careful there. That's a tough game. Because even when you think you know and you're in the know, you get humbled real quick by the market. So be careful with that, please. I don't want to see anybody lose money. All right, I know Franklin asked me to do one. What do you want? VMware, I believe. Franklin, my gentleman member, VMware. Let's bring it up. Tilray did really, really well today. See, we pulled back on Tilray. I went over this morning. We got the pullback, and it rallied back. Cool. I think that was Patrick that was looking to get involved with that. Hope you got in on that pullback. All right. Wrong symbol, Bob. VNM. Oh, VNM. Sorry, I'm thinking another stock. I'm thinking, yeah, Vietnam. Sorry. I'm thinking VMware. I don't know why. Let's go to my stored chart of VNM. All right. Van Eck. I know I have a saved chart here. Where is it? Here we go. So VNM is looking very good. We had broken out in September, retest 1, near retest 2, new monthly high on the month. We're back. We're off of the high a little bit, but that's okay. The fact that we're able to put in new monthly highs is good. The thing to keep in mind is that we have a tremendous amount of overhead supply. Right in here. Going back many, many years. So it's going to be a lot of backing and filling to work through this resistance level. I think that this is a great candidate to dollar cost average into. Daily chart, inside day today. Stokes look very good. Listen, if I were initiating a trade, I would be fine with opening up on here. But I would wait to get aggressive until we close above, at least on a weekly time frame, a close above 15.50 per share. We get a close above that mark, especially on a monthly time frame, I'm all in. I think it looks very, very good. I think we're going a lot higher. I mean, man, once we break out and up and into the 20s, sky's the limit. I really ought to have a position. I've been talking about it for months. I've just been putting off buying it, waiting for a pullback that just doesn't seem to be coming. Look at this quarterly chart. Look at the quarterly breakout here. You know, granted, we're only in the second month of the quarter. A lot of time to go here. But I'll tell you, this is a major, major event where we're to close out this quarter above this resistance level in blue. I think this is a perfect candidate to dollar cost average into, because it's going to pay off over the course of the next several years. All right, let's take a look out. NEO's one that everybody's been talking about tonight. Crocs, Andrew Crocs. I haven't even thought about that stock. My wife wanted to kill me one time. I was with the kids when Crocs was in Fuego. I was with the kids down in Universal Studios in Florida. And I was trading Crocs. I'm standing there in Universal Studios with the kids, and I'm trading Crocs on my phone. I'll never forget that. She was not too pleased. All right, NEO. Let's take a look. Let me first check to see if anything happened after hours. China's NEO steamrolls past GM's market cap. So what? All right. So let's take a look at a 4-hour chart first. It's very overbought. It can go higher, but it's very overbought on an intraday basis. You have RSI at 82, nearly 83 after hours. Let's take a look at the multi-time frame view. I think I have a saved chart here. You know, this is the place here to have gotten involved. Right there. Breakout, pullback, retest. I wouldn't buy this stock at all, man. Here's your third standard deviation Bollinger Band in white. We are way above that Bollinger Band on a monthly time frame. And this is the second consecutive month being above it. Weekly chart. I would not initiate a new trade on NEO. Daily chart. It looks like it's probably going to go up higher. If I were long, I wouldn't sell it. I would put a trailing stop loss order in and let the market take me out. Me personally, I wouldn't initiate a new trade here. RSI daily time frame, where are we at? Was it 83? They got to change that font. Yeah, 83. I'd be very, very careful here. I think it's going to drop. And when it does, it's going to drop like a rock. Be very, very careful. In fact, it's one of those stocks where I want to know if there's put options on it. Yep, there are. But keep in mind, as I'm talking about this, there's no way I would go in tomorrow morning and short these shares. If you showed me RSI 90 or greater, I would be interested in it. I think this is a stock where if you went shorting tomorrow, despite the fact of what the monthly chart is overbought relative to the third standard deviation Bollinger Band, along with the weekly chart, I think this is a rip your face off stock that I would not short right here, right now, despite the fact that RSI is above 83. I think it goes higher. And again, if you're long, trailing stop loss order, good to cancel. And I would look to short it once we get RSI above 90. And I think that's where we're going. What else do we have? What time do we have? 6:47. I'm looking for quotes. Baba. All right, let me take these in order before I forget somebody. Crocs. I haven't looked at Crocs in I don't know how many years. Man, that was a high flyer. Actually, I wore my Crocs. I have a pair of Crocs. I was Moses, as I mentioned, for Halloween. And my sandals, the closest thing I could come up with were my old Crocs. That's my story. And I couldn't come up with I have to show you the photo. I couldn't come up with a proper garb to wear to mimic Moses, Charlton Heston in the Ten Commandments. So I wore a Hawaiian shirt, but I did have the stick. So I was Moses on vacation in Hawaii, but I had my stick, let my people go, and my sandals, my Crocs. I looked like an absolute idiot, but it was funny. We had a good time. So, all right, Crocs. Wow. Crocs looking good. I'm hating on it. The stock is doing great. Beautiful monthly chart. Let's get rid of this. Drive me crazy. This is when I was trading it, back in 07. Amazing chart. Talk about a sleeper. Pretty extended here. I mean, this is another one where I would use a trailing stop. Weekly chart. RSI weekly time frame 80. Incredible price action here. It's going higher. It's going higher, no doubt about it. Bullish reversal bar, continuation breakout today, multi-year high. On volume. He's got volume dropping off. I guess they had some sort of a news event today because volume picked up. It's going up higher. I like it. Would I initiate a new trade? Not my style, but I could see why people would on a new daily high. So I like it. Think it goes up higher. Alibaba. Monthly chart. Not good. Not starting off good here. We undercut last month's lows. That's always a warning flag. No trend lines to be concerned with. Weekly chart. We broke trend a little bit here. I mean, if we break 285, I believe that is 285 per share, and close there, we're going a lot lower. But the support level may hold. We don't know yet. I mean, it's a wait and see stock. I mean, they're fighting like hell to hold this support level. Held it once, defended, rallied, back down again today. I think this stock may break. Yeah. It's weak. Broken trend. Big volume. It's under distribution. You don't want to get in front of these guys. They're dumping shares. Look at that volume. If we do fall back and break support, 264 is the next support level. Then I'd be looking at 241. So I would not get in front of this one if you're looking to get long. If you're looking to short it, that's a different story. I would wait for a counter trend move up higher on Alibaba. I only have a weekly chart. So what I would do here is if we rally, I would look to short the shares right at around $300 to 305. Look for a stall and then a rollover at that level. I would avoid as a long. Well, what else do we have? Boeing, I went over. Didn't I not go over that earlier? Yeah, I went over that earlier, Rick. PTON. With the lockdowns coming back into play in Europe and in the United States, it's breathing new life into PTON. And even, I went back to the gym, and even though they're open, hardly anybody there. A lot of people are still afraid. So the story is still good here. I think it goes up higher. Nice pullback. We rallied. Let's take a look at a weekly chart. Make sure there's no shenanigans going on the Stokes. No, looks good. We got a little bit extended. Orderly pullback. Bounced off of 110. I think we're going up higher. I think it's a buy. Stop loss right below 109 per share. Yeah. I gotta get Oliver. I gotta get the pictures. Yeah, it was an interesting night. Oliver, Boeing showing signs of rolling over, down about 90 after hours. Really? What are you goofing on me? Are you goofing on me, man? Spy? We kind of already went over that, but I'll go over again. We'll make that the last chart of the night. Oh, Square. We'll go over Square, Spy, and we'll finish off there. Oh, 90 cents. You scared the heck out of me. Looking good. Looking good. We had that bearish reversal bar last month. We did put in a new lower low so far this month, but support held. Can't argue with support. The concern I had last time we spoke about Square was that we had a bearish reversal bar. The probability was that we would move lower. We did move lower. However, buyers moved in, salvaged the shares. Monthly chart looks good. Weekly chart looks good. A little bit of resistance up here. Daily chart. Faded a bit on the day. That's okay. It's in the middle of a trading range. So either I would wait for the breakout above resistance at 187, which is pretty far away, or wait for a pullback down to 159. We're in the middle of like no man's land. And I don't like the fact we faded on the day. Let me see if I'm missing anything here. Nice reversal bar in the week, man. That's really pretty. Yeah, I don't like the fade. I got to tell you. A little bit of resistance at 188 per share. Excuse me, 178 per share. I stand corrected. I would be interested. If we manage to close above 178 tomorrow, I'd be okay with adding more. Wait till the final minutes of trade, make sure it holds. Or wait for a new weekly high next week, and then I would enter the position. Those are my thoughts. Spiders. We'll leave off with spiders. So my take here on the spiders, and this is why I haven't taken my hedge off, is that I get the feeling that all they're doing right now is you're having some buyers out there, relief rally. I'm not going to deny that. The Senate was held by the Republicans. The House lost a few Dem seats, gained a couple of Republican seats. The markets can live with that. The markets like gridlock. They like gridlock. So we have gridlock. There will be a lot of gridlock. Now, the gaps up day after day are concerning to me. I don't like it. I'm suspect of it. And we get moves up like this. We were up nearly 2% on the day, just shy of it. And the best we could do with volume is about average. I'm not buying that. And yesterday and the day before, you saw fades at the end of the day. You saw a little bit of one today, not too much though. And the Qs broke out on the day. I have a short open on the Qs. It broke out on the day. I'm going to let it sit there for a couple of days, see whether or not we hold it and we follow through to the upside. Then I'll have to stop out, take that hedge off. But if we fail to hold the breakout today and we drop back down into a trading range, Qs are done. If the Qs are done, the S&P 500 will be done. So right now, I'm taking a very cautious approach. We have longs on, and longs are doing very well. But I do have a hedge on for protection, and I'll keep that on until such time as we break out on volume, we consolidate a bit, a little bit of backing and filling would be nice, a couple of higher lows here and there. Throw me a piece of meat to make me feel comfortable that this rally's for real. I'm not getting the warm and fuzzies. Add to that, you have a dystopian political situation going on here. You don't know what's going to happen next. A ton of headline risk. The market's overvalued. I went over that chart earlier. It's extremely overvalued, circa 2000 overvalued. So I don't care what the market is doing right now. I just don't feel comfortable with getting aggressively long. I think that I get the feeling that we're being suckered. That's my intuition. Could be wrong, but that's my intuition's paid off quite a bit. So that's my take. I'm sticking to it. Everybody oh yeah, thank you, Franklin. Smash that like button if you would, please. Thank you very much. And everybody have a great night, profitable trading day. Be well.